Hey there, my fellow iguanas. Iggy here with another insightful stock analysis that might just ruffle some feathers. In this video, I'll be diving deep into the recent neutral rating given to Japan Foods Holdings by analyst Shekhar Jaiswal. But brace yourselves, because this isn't your typical boring finance talk. I'm about to serve up a piping hot plate of juicy details that'll leave you hungry for more. Imagine a world where your favorite Japanese restaurant suddenly starts losing its flavor. Well, that's exactly what Japan Foods Holdings is facing, and Jaiswal's rating might just be the wake-up call they need to get their act together. So stick around, because this is one meal you won't want to miss. Japan Foods Holdings is a fascinating company that has made its mark in the food and beverage industry. Based in Singapore, it operates a chain of Japanese restaurants that are popular among locals and tourists alike. The company has a unique business model, which is divided into two main segments, halal and non-halal. This strategic division allows them to cater to a diverse range of customers. The halal segment of their business is specifically designed to cater to Muslim customers. Halal food is prepared according to Islamic law, and this segment ensures that the dietary needs and preferences of Muslim customers are met. This thoughtful approach not only respects cultural and religious practices but also opens up a significant market segment for the company. On the other hand, the non-halal segment of Japan Foods Holdings serves up a variety of delectable Japanese cuisine that can be enjoyed by everyone. This segment includes a wide array of Japanese dishes, from sushi and sashimi to ramen and tempura. The non-halal segment thus caters to a broad customer base, appealing to those who enjoy the rich and diverse flavors of Japanese cuisine. But there's more to Japan Foods Holdings than just its restaurant operations. The company was established in 1997 and has since grown to become one of the leading F&B groups in Singapore, specializing in quality and authentic Japanese cuisine. It operates more than 50 restaurants under various franchise and self-developed brands, demonstrating its significant presence in the industry. Moreover, Japan Foods Holdings is not just a restaurant operator. It's also an investment holding company. This means it holds assets in other companies, which can provide additional revenue streams and strategic advantages. It's also involved in the supply of food ingredients to its sub-franchisees and franchisees, further expanding its business operations. In terms of financial performance, the company's stock price was 25 cents as of May 17, 2024. It's listed on the Catalyst board of the Singapore Securities Exchange Limited, providing an opportunity for investors to participate in its growth story. Shekhar Jaiswal, a respected analyst at RHB Bank Singapore, recently conducted an in-depth analysis of Japan Foods Holdings. His analysis was comprehensive, examining the company's performance and future prospects. After careful consideration, Jaiswal decided to maintain a neutral stance on the company. This neutrality indicates that he doesn't have an overly optimistic or pessimistic view of the company's future. He sees potential but also acknowledges the challenges that the company might face. Interestingly, Jaiswal made a noteworthy adjustment to his forecast for the company. He lowered his target price for Japan Foods Holdings stock from 29 cents to 26 cents. This change is significant as it suggests a shift in his expectations. It appears that Jaiswal believes the stock may not perform as robustly as he had initially anticipated in the near term. This adjustment could be due to a variety of factors. It's possible that Jaiswal took into account the company's recent financial performance, market trends, or changes in the broader economic environment. It's also worth noting that target prices are based on projections and assumptions about the future, which can change as new information becomes available. Despite the lowered target price, it's important to remember that this doesn't necessarily mean that Japan Foods Holdings is on a downward trajectory. A neutral stance suggests that Jaiswal believes the company has stable prospects. He might see potential for growth in some areas, while also recognizing possible risks or challenges in others. Now, let's dive into the reasons behind this target price reduction. It all boils down to Japan Foods Holdings' financial performance in the previous fiscal year. The company reported a loss for the financial year 2024, which is certainly a concerning development. This loss was primarily driven by higher operating costs, such as labor expenses, utility bills, and depreciation charges. Despite maintaining a healthy gross profit margin of 84.7%, which indicates that the company is making good money on its sales, the increased operating costs ate into their profits, resulting in an overall operating loss for the year. One of the key factors contributing to these higher costs was Japan Foods Holdings' aggressive expansion strategy. In the previous financial year alone, they added a whopping 14 new outlets to their portfolio. Managing and staffing such a large number of new restaurants is no small feat, and it undoubtedly put a strain on the company's resources. Looking ahead, Shekhar Jaiswal, the analyst at RHB Bank Singapore, has made some interesting predictions about the future of Japan Foods Holdings. He believes that the company will need to put the brakes on their expansion plans. This is a significant shift from their previous strategy, which involved rapid growth and the opening of new outlets. Specifically, Jaiswal estimates that the company will only add one new outlet in the halal segment in the upcoming financial year. This is a considerable reduction compared to their previous pace of expansion. However, this slowdown in expansion does not mean that Japan Foods Holdings is becoming complacent. On the contrary, the company appears to be shifting its focus towards improving and revamping their existing brands and concepts. This is a strategic move that could potentially strengthen their position in the market. The company plans to replace some of their underperforming brands, often referred to as ailing brands, with new and improved ones. This initiative will be implemented across both the halal and non-halal segments. The goal is to refresh their offerings and appeal to a wider customer base. By doing so, they aim to enhance customer satisfaction and loyalty, which could lead to increased sales and profitability in the long run. In the previous financial year, Japan Foods Holdings experienced a mixed bag in terms of sales performance. The non-halal segment of the business saw a decline in both total revenue and revenue per outlet. This is not an encouraging sign, as it indicates a decrease in customer demand or possibly increased competition in the non-halal food market. It could also suggest that some of the non-halal outlets might not be performing as well as expected. On the other hand, the halal segment of the business performed significantly better. It saw an increase in both total revenue and revenue per outlet. This suggests that the company's strategy to cater to the dietary needs of Muslim customers is paying off. The increase in revenue could be due to a variety of factors such as successful marketing efforts, effective menu pricing, or simply an increase in customer demand for halal food options. However, despite the mixed sales performance, Japan Foods Holdings is not standing still. The company is planning to introduce a pay-at-the-table option for customers. This is a strategic move designed to address some of the cost pressures the company is facing, particularly in terms of labor costs. The pay-at-the-table option could potentially help the company save on labor costs. With this system in place, the company won't need as many servers running back and forth to collect payments from diners. Customers will be able to conveniently pay their bills right at their tables, reducing the need for servers to spend time processing payments. This could allow servers to focus more on providing excellent customer service, which could in turn enhance the dining experience and potentially increase customer satisfaction and loyalty. Another interesting development is the company's decision to adjust their dividend payout ratio. Previously, they paid out 100% of their earnings as dividends to shareholders, but now they've changed it to at least half. This adjustment, combined with lower capital expenditures and strong operating cash flow generation, should help the company gradually increase their cash balance over time. Jaiswal has also revised his earnings estimates for the next 2 financial years, cutting them by 9% to 11%. He expects the cost pressures to continue, which could further impact the company's profitability in the near term. However, there are some potential upside risks to consider as well. If Japan Foods Holdings can manage to keep their operating costs lower than Jaiswal's estimates, or if their halal concept restaurants perform exceptionally well, or if there's reduced competition in the Singapore food and beverage market, their prospects could improve significantly. Overall, it's a mixed bag for Japan Foods Holdings. While they're facing challenges with rising costs and underperforming segments, they're also taking steps to address these issues and position themselves for future growth. And there you have it, folks, the full scoop on Japan Foods Holdings and Jaiswal's not-so-sweet rating. Now, I know some of you might be feeling a bit peckish after all that financial talk, but don't worry, I've got just the thing to satisfy your cravings. Hit that like button and subscribe to the Investing Iguana for more delicious content that'll keep you well-fed and well-informed in the world of stocks and investments. Remember, my iguanas, the key to financial success is staying hungry for knowledge and keeping an open mind. So keep those questions coming, and I'll be sure to serve up some more tasty insights in the next video. Until then, stay hungry, stay curious, and keep investing wisely.